Hi there. This is a special session dedicated to the application of traffic lights. Prior to going to the detail of the presentation, here are the disclaimer. Traffic lights and capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the agenda. Intermediate entry and exit point with traffic light Dow and NASDAQ. The second point we are visiting will be verify the signal of a major bearish market trade from traffic light S&P 500 with the intermediate indicator traffic light Dow and NASDAQ. Here is the guide I will apply when we review traffic light Dow and NASDAQ to identify intermediate entry and exit point. When the line is peaking or bottoming, it is an indication market direction is about to change. The location of peaking and bottoming can be significant. The bullish indication often shows up when the red dashed line starts to bottom or the solid green line starts to peak. If the bottoming of the red dashed line happens below the solid orange line and the peaking of the green line is above the solid orange line, the bullish posture is stronger. The bearish indication often shows up when the red dashed line starts to descend. The bearish posture is stronger when the descending is about to cross below the solid orange line. The strongest bearish posture is when the green line is ascending rapidly and become higher than the red dashed line and stay high. I will point out this situation in the next few slides. Let's focus on preferred bullish trades. This happens when the Dow money in line, the red dashed line, bottoms, especially below the solid orange line, or the money outline, the green line, peak above the solid orange line. The three green arrows indicates the intermediate bullish entry points. The first two, these two, is when Dow in line bottoms below the orange line and the Dow out money line, the green line, peaks above the solid orange line. The third arrow happens only when the Dow money in line, the dash red line, bottoms below the orange line. Here's the same time frame on traffic light NASDAQ. You can see similar things. In this case, all three arrows instance point out when the green line peak above the solid orange line and red line bottom below the solid orange line. Here, 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 here. In this slide, I will show you some bearish trades. The trade we are looking for is when Dow in money line peaks and the Dow money outline start to ascend rapidly. Again, the Dow money in line is a red dash line and the Dow money outline is the green line. As you can see, when the line start peaking and when the green line starts to rise rapidly, those are bearish posture. The more important ones are when the green line ascends rapidly. See the speed, a slope is going up. This is the traffic light NASDAQ in the same time frame. The first arrow identifies the peaking of money in line. The second arrow identifies the rising of the green line rapidly. And also the third arrow showing the similar things. So it is important when you look at traffic light Dow, you also look at traffic light NASDAQ to see how the market orientation. For the rest of the presentation, I will use traffic light Dow and NASDAQ to verify whether the crossing of the red line, as you can see here, where the traffic light S&P 500 crossing its red line, is genuine. We'll look at three different periods: 2008, 2011, and 2015. Let's go over the legends. X-axis is the time. The oldest period is on the left. The latest period is on the right. Y-axis is the pricing for the S&P 500. The blue line here is the daily close of the S&P 500 ETF SPY. The green line here is the proprietary traffic light S&P 500. The horizontal purple and the red line applies to traffic light S&P 500 the green line. The red line is the long-term conservative line. When the green line crosses above the red line successfully, it is better to take a long-term conservative positions. The purple line is the long-term position indicator. When the green line crosses above the purple line and crosses below back, as shown in the past, it is less risky to take a large bullish position. The indicator on the right here is basically measuring the amount of risk in the market. When it's green at the bottom, it is usually less long-term risk. As the indicator green line climbs up, the risk accumulates, and we should be more mindful when you get to the red line. Here's the overview of the traffic light Dow for the last 11 years. Well, again, as I mentioned earlier, we'll look at the period in 2008, 2011-12 period, and the recent 2015 period. Let's start with 2008. Here's the zoom-in view in 2008. Prior to traffic light S&P 500 cross above its red line, traffic light Dow is showing bearish crossover, meaning that the money outline cross above the money in line, cross over here, cross over again. Traffic light Dow money flow out line stay above the dashed red line during the entire period. The similar trade can be observed in traffic light NASDAQ. See, there was bearish crossover, the green line crossed above red line, the red line stayed below, and the green line basically dominates the entire period. Let's review the period in 2011 to 12, identified in this blue rectangle. As you can see, the bearish posture was brief, and the bullish posture took over by bullish crossover, as shown here, and the money in the red dashed line stays above the money outline. The similar trade can be observed in traffic light NASDAQ. Again, there was rapid rising of the green line, but later, about beginning of 2012, there was bullish crossover, and the red line start dominating the green line. I mean, there are a lot of so-called entry point, intermediate entry point in this process, peaking of above the solid orange line and bottoming. Those are all entry points. Lastly, we look at the recent false crossing in 2015. Again, the money outline dominates briefly, and the money inline took over. So there was accumulation here, then bullish crossover, then from there, everything is bullish. The similar trades can be observed in traffic light NASDAQ. The green line dominates for briefly, then there was a bullish crossover. Potentially, here's the entry point, peaking, bottoming, peaking, bottoming. In summary, we talk about the intermediate entry and exit points using the traffic light Dow and NASDAQ. When traffic light Dow and NASDAQ peaks or bottom, especially above or below the solid orange line, an intermediate bullish or bearish market will follow. We also talk about verifying a major bearish event from traffic light S&P 500 with traffic light Dow and NASDAQ. A major bearish event is more likely to happen when the money outline, the green line in traffic light Dow and NASDAQ, stays above the money inline, the red dashed line, for a significant amount of time. If you have any questions, please do email me. Thank you for listening.